JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 18th of August 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Okay, so now then, let's jump into the markets, the charts, and let's start off with Nikkei 225. Now, yesterday I talked about this one, and I was telling you guys to keep a close eye on this downside line and the some of these levels, like for example the 23,000 and this 22,965 territory, which is the highest point of July, which as you can see currently is acting as a good area of support. So what I was also mentioning yesterday, that even if we see a further move lower, as long as the price remains above this downside line taken from the high of the 9th of June or above this 21-day EMA shown as the yellow line, then yep, there is a good chance for the bulls to kind of drive this one back to the upside. So again, for now, yes, we are seeing a bit of a decline here, but for now we will class that as a temporary correction before another possible leg of buying. So keep your eyes on this one. If of course the price starts dropping heavily and moves below the downside line here taken from the high of the 9th of June and drops also below this 21-day EMA and closes the daily candle below that, then well, we could consider a bit of a move lower here. Now Shanghai Composite is in the positive territory for now, slightly in the positive territory. However, as you can see, also yesterday I've talked about this idea of a possible range here. Again, for now you can see that this barrier, the 3,457 territory, continues to provide decent resistance. The index is struggling to overcome this highest point of July. So for now we'll keep on monitoring that, and to be honest, we cannot really do anything here even with the upside, because we need that confirmation break and a close above that area, above this level, above the 3,457 territory, in order to get a little bit more comfortable with further acceleration to the upside. So again, for now we're just watching this. If this now, for example, today forms a doji here on the daily chart, well, there could be a possibility to see maybe a bit of a correction here to the downside. However, we're not gonna let's say get very pessimistic around here. If we do see this correction lower, then we'll keep an eye on the 21-day EMA, because it may provide decent support as it did back here around well, last week to be more precise. So yeah, for now, all eyes are on this barrier, the 3,457. If, of course, that gets broken and we see a daily close above it, then yes, higher levels could be met. Also, keep your eyes on a possible idea where, for example, let's say today it closes below this. It could close below this barrier, but tomorrow it could get a boost again and push higher. So basically, it wouldn't go even for this correction, and it could just push higher straight away. So that's why be very careful with that. Keep this idea in mind. But in a way, how you could look at this is, for example, in order to consider the downside, in the short run, then you could keep an eye on this little level right here, the 3,409 zone, marked by the high of the 11th of August. And oh, by the way, that would also be the highest point of last week. So just to kind of mention that as well. So a drop below this 3,409 territory could in a way lead the index towards a bit of a larger correction to the downside. So this is how you could look at it in order to kind of protect yourself a little bit. So yeah, guys, for now we're probably gonna leave this one and just gonna observe the price action. But once the one of these levels, the ones that I mentioned, will get violated, then yes, we'll take it from there. Now, the German DAX closed yesterday fractionally in the green. The most important is that yesterday I talked about this 12,913 zone, which is the highest point of June. As you can see, it continues to provide decent support, and looking even at the cash index right now, it is just currently balancing just bang on this level. So that's how important this level is. Although we got these overshoots here, still you can see that the bulls kind of managed to drive the index back up towards this 12,913 zone. So for now, we'll be very careful, we'll be very cautious here, and in a way still I'm keeping this idea in mind where we could, if this level here, this 12,913 zone, or the 21-day EMA shown as the yellow line here, if both of these are going to continue to provide decent support, then yes, a nice curved up move to the upside here could be possible. For those who are more on the cautious side, you could wait for a push above the 3,100 zone here in order to get a little bit more excited about the upside, because such a move would confirm a forthcoming high. But of course, if it starts moving sharply to the downside, falls below the 12,773 territory, at the same time this the price would be placed below the 21-day EMA, and potentially we could see a bit of selling activity here, and possibly bringing the index towards the 12,517 zone marked by the low of the 7th of August, or even towards the 12,254 level marked by the low of the 30th of July. So again, keep your eyes on this one, guys. Very interesting developments, but yeah, let's see how all this is going to play out. Now jumping into gold. This is working out perfectly according to the plan that I've talked about yesterday. Basically, yesterday we were still hanging around here, slightly above that 1940 zone, and what I was saying that in a way, there is a good chance for this one to move back here towards this 1981 zone. You can see that this is exactly what happened yesterday. What I was saying yesterday, that as long as it remains above the 21-day EMA and the 1940 territory, there is a good chance for this one to move towards the 1981 level. So this is what exactly what happened. We even got a close, a daily close above that level. So today we're seeing a continuation move higher, and the most important is that the commodity came very close to testing that psychological 2000 zone. So basically our other target got reached. Now also what I was mentioning yesterday, that for now I will only aim for the 2015 territory, roughly around here, marked by the inside swing low of the 7th of August. And if we get a nice hold up somewhere around here, then we could see maybe a drift back down towards this upside support line taken from the low of the 20th of March. So for now, keep your eyes on this one. It's coming close to the like I said, to that psychological 2000 territory. Just fell shy of a few points from reaching that, but still, I mean, we still have a full day ahead of us. So yep, let's see how all this is going to play out. But for now the target is that psychological 2000 zone and the 2015 territory. DXY dollar index continues to drift lower, but still within the range. So in a way, everything's kind of looking quite bearish here. I mean, quite exciting for the sellers. However, as I mentioned before, we need that confirmation break, and ideally a daily close below the 92.55 territory right here before, like I said, we could examine further declines. Again, If we do get that drop, then our next target is the lowest, the low of the 15th of May. Let me just quickly, no, that's going to be 14th of May. There we go. So the low of the 14th of May, that's going to be our target, the 14th of May of 2018. That's going to be our next target near the 92.24 zone. However, if that gets broken, then yep, further declines could be possible here. But again, for now, guys, be very careful, be very cautious, and let's see if we actually going to get that daily close below this area, below this 92.55, because what we also can see, what we can get could be that false breakout, and then we could see a nice reversal back to the upside. So that's why wait for this one, guys, to make a better move. Bitcoin, quick update here. So yesterday I talked about this level right here, the 12,097 zone, which got broken nicely yesterday, and we got a nice daily close above that, and then the crypto traveled towards this 12,325 zone. Let me just remind you what that level is. That's the highest point of August 2019. So not only did we manage to, well, actually, I wouldn't say not only, but we've managed to reach that target, the highest point of August of 2019. That's great, and we also managed to overshoot it. But as you can see, we didn't get a really daily close above that. So in a way, now this is the reaction we're getting here. We're getting a bit of a correction lower. However, if the price continues to balance above this 12,097 territory, then, well, I mean, the upside is still on the table, and we could see this one pushing back to the upside. So for those who are more on the cautious side, you could wait for another push above the 12,325 zone in order to kind of get a little bit more comfortable with higher levels. In case this pair starts heavily dropping below the 12,097 territory, then maybe, just maybe, we could consider a possible larger correction to the downside towards this 21-day EMA, and then we would take it from there, of course. But for now, all eyes are on this 12,097 territory. Let's see if it can continue to provide support. If it can, then yes, like I said, we could see a nice reversal here back to the upside and a push above the 12,325 zone. If that happens, then yes, it could open the door towards a further acceleration to the upside, where our next good target is right here. Let me just put this one on the chart, and that's the high of the 11th of sorry, not the 11th, but yep, there we go. The 10th of July of 2019, and that's roughly around the 13,174 level. So keep your eyes on that one. Now jumping into AUDNZD. So we got the RBA meeting minutes today, this morning. So to be honest, I mean, there's not much changes. I mean, the bank will continue monitoring this, the overall situation, but you can see that yes, here the Australian dollar against the New Zealand dollar continues to rally here. I talked about this pair yesterday, and I was telling you guys to keep a close eye on some of these levels, like for example the 10,000, 1.1020 territory, and you can see that we're getting a nice comfortable move above it. The next target for now is the this 1.1066 level, which marks the, let me just quickly zoom in here a little bit, which marks the high of the 20th of August 2018. So that's where we're currently trading at. We're trading in near those levels, near the August levels of 2018. So for now, yes, we are a little bit more on the bullish side. However, as I've mentioned before, that yesterday, that if we somehow get a reversal, a strong reversal back down here below the 1.0994 territory right here, then yes, we could maybe consider a bit of a larger correction to the downside. However, for now, any moves lower are kind of slightly off the table. Let's see if we can reach this 1.1066 level first. AUDUSD. So also at a very interesting spot right now. So the pair is very close to the current highest point of August, near the 0.7243 zone. In order to aim for some higher levels, obviously we need to see a push above that barrier. So for now, we're gonna probably take a bit of a cautious approach, although everything's kind of leaning towards the upside. Now we could draw some upside lines here. Probably the one that I want to draw here is this short-term one. Oh, right, okay, so let me just kind of adjust this very quickly. So that's the one that I'm going to draw here. So this is the little short-term upside support line, which also coincides with the 21-day EMA. As you can see, the 21-day EMA does continue to provide decent support. So in other words, let's wait for that confirmation break above the 0.7243 level first before, let's say, attacking some higher levels here. One of which could be, and let me just quickly grab this one, one of which could be this one right here. Oh, there we go. The 0.7295 territory, marked by the highest point of February of 2000, and is this the highest point of February? Let me just quickly double check this, guys, in order to be on the safe side. So no, that's actually the 31st of January 2019. So the highest point of January, yep, let's see if we can reach that area. But again, as I said, guys, we need that confirmation break first above the current highest point of August, near the 0.7243 level, and then we could consider further upside. If by any chance this somehow starts dropping back down and breaks this short-term upside support line, keep your eyes on this little support zone right here, marked by the low of the 12th of August here, and that's roughly around the 0.7109 level. So a nice good drop below it could open the door towards lower areas, guys. For now, yes, we have the downside slightly off the table, but we're not really getting comfortable with higher levels yet, because we need that confirmation break above the 0.7243 level first. USDCHF. So I talked about this one yesterday, and finally we got that nice daily candle staying below the 0.9073 level. Wonderful, which means that there is a very good chance right now we could see a further decline. And let's see where we can find the next potential target. So the next potential target is around here, near this inside swing high let me just double check, is this the correct date here? So the 22nd of January 2015. So is it 22nd of January, or is it the 20th of January, guys? So yep, the 20th of January 2015. That's our kind of one of our good levels to watch here, the 0.8837. However, for now, yes, the pair is drifting lower. It seems that it wants to move lower, but be very careful near that psychological 0.90 level. So let's see if the psychological 0.90 level does provide a good area of support. If it does, then we could see a nice rebound here, because don't get me wrong, the pair is quite overstretched here to the downside. So yep, let's see how all this is going to play out. But for now, well, I mean, for now it's a little bit of a tricky one here. I mean, for the buyers especially. So let's see if this can push further north. For now, we are aiming still for further lower levels, but we'll be very careful near that psychological 0.90 level. And GBPCAD. Now I talked about this one yesterday, so this is just a quick update. I'm not going to spend too much time on this, because I talked about this pattern yesterday. So for now, the pair seems to be within a falling wedge pattern. If so, then we know that these patterns tend to break to the upside. They tend to be bullish, but again, until we get the break of the upper side of this pattern, we cannot really talk about any upside. And just to kind of strengthen the upside idea, a push above the 1.7396 zone could do the trick for more buyers, so keep your eyes on that one. If this somehow drops heavily to the downside and breaks this short-term upside support line taken from the low of the 1st of July, then, well, I mean, we could start considering maybe a larger move to the downside. And finally, Euro USD. So this is what I was talking about yesterday. So basically, I kept mentioning this idea to keep in mind that there could be possibility of a head and shoulders pattern here. However, what I was also saying that if it reverses, if it struggles to get closer to this 1.1909 level, then yes, we could consider this possible head and shoulders pattern. However, what I was also saying that if it starts pushing, if it continues to push north and it ends up almost testing this 1.1909 level, then we can scrap the whole head and shoulders pattern for now. Basically, the whole question here, or just the big question here, will be, can it actually overcome this 1.19? Well, let's round up towards the 10. So 1.1910 zone, can it overcome it and close a daily candle above it? If it can, then we will aim for higher areas, like for example that psychological 120 zone. But if it still struggles to overcome it, I mean, let's not forget that we could get an overshoot here. But if the daily candle still ends up closing below this 1.1910 zone, then we could see maybe a move back down here, and this way kind of the pair would confirm that this range right now is too strong for it to overcome. So yep, like I said, for now all eyes are on this 1.1910 zone. If we get a nice overshoot here and we get a nice daily close above it, then yep, wonderful for the bulls. We could see higher levels getting hit. But if it struggles to remain above this barrier, above this 1.1910, then we could maybe revisit the lower bound of the range again. So, okay, guys, I really hope you found it useful and really appreciate your time, guys. Thank you very much for joining in. I hope you, like I said, I hope you found it useful. And if you want to catch my video later on, my trader's tea time is always 13:15 GMT. But for now, guys, I'll have to wrap it up here. Thank you very much, and have a wonderful trading day. Stay safe.